Alrighty, so let's get right into it. Open up a little TRXC here. So this is, my name is Andrew Taranta, and I love talking about stocks. I love doing it. I got into stocks earlier this year specifically, so a little bit of a noob, as they say in the stock world. I don't think that's what they call them. But I learned a lot. I have a lot of knowledge, and I want to kind of spread it. Obviously, you tell me, you let me know. Well, I mean, I guess you leave if you don't like it, or if you don't find it knowledgeable, or you don't find it valuable to listen to. But I want to talk to you a little bit about a stock that I've been looking at for a little bit now, and a stock that I have already found and did very well on, and show why I see the same pattern emerging. And not only do I see the same pattern emerging, but I see it happening not happening almost the exact same way, but it's very interesting. So let me show you what exactly this looks like. So this is PIX, very, very good company. I had invested in them, guess what? Right around this little area. Right around here. This is when I invested in them. And right about there. There we go. Right here. Right at the bottom. Right at the tip bottom. That's when I got there. I got right at the bottom. And how I did that was I looked at this company and I looked at a few factors. Obviously, the PB ratios, I did check those out. If you're not sure what a PB ratio, that is the price over book. Okay. And that gives me a great indication of understanding the price of the stock versus the book value of the stock. So if we know what the book value is, how do I find the book value? We find it by seeing how many outstanding shares there are, and we divide that by the total equity of the company. And when we did that, we came up with not only a great industry, first of all, growing industry, one of the best growing industries of 2020, which was energy, but it was also a matter of looking at the book value per share and saying, okay, I see that I have, a book value of, let's say, $3, and I'm trading at 70 cents, and I'm going up. And you look into 2020, you had the coronavirus, and this is an ethanol-based company, Pacific Ethanol. Ethanol is one of the main ingredients of hand sanitizer. Completely set themselves up to be an incredible company. But they didn't look like that. If we just took this out, we took all of this out here, we just covered up all the green to the right with the big arch up, you would have just been like, no, it looks like nothing. Now let's go to the company that I want to talk about. This is the company I made a little bit of money off of. Talk about the other company. So this is, what is this? This is okay. This is TRXC. Okay. So this is TRXC. And essentially what this company is, it's a medical supply company. So to give you the little bit of a brief rundown, the company is focused on the development and commercialization of ALF-X surgical robotic system and the ALF-X and SurgiBot system. So essentially, they're making robots for surgery. Let's just put it that way. Who needs to know all about these specifics just yet? Essentially, they're making robots. And it's one of those things that is an industry that, remember, like I said, with the energy industry, is growing. If you're going to value invest, you should value invest into still a growing industry. You shouldn't be, not that you shouldn't, but you can value invest into a negative industry or an industry that's deeply in the red. But I think it's a little bit better to find a red company in a value industry. And I think a value company in a green industry that's going up, that's growing. Because now the industry is growing for whatever the reason might be. And with it will become almost an inevitability that she'll make some money just based off of even if the company's complete trash, just reduces your chances of, things not working out. But this right here, this is TRXC, and they're currently trading at about $65 or 64 cents a share. 65 would be having a heart attack. 64 cents a share, and they've been in this kind of rut, as you could say, all 2020. 2020 has been kind of just nothing but downward momentum, a little bit of a rise up here, but pretty flatlining here. But that's good. That's what we want to see. We want it to feel like it's a dead company when it's not. It's not a dead company. So what we have here is we have 2020. You could see, shorts made a ton of money there, but now I think the truth is that we're going to see a reversal, and a very serious reversal of fortune. And we're going to see the coming back of this company. So right now it's trading at about 64 cents a share, and I got in on this bad boy in this general area August, July, something like that. I started 35, 40, which put its PB ratio at about 0.5, and it put its price book value per share. I think it was actually still 1.2 because they hadn't even released their so it might have been even a lower ratio, but they didn't release their 10Ks as of that moment. So in other words, it was really low. It was really low, and so being able to buy that was really nice. So make a little bit of profit on that, and then from there, you have all of this potential with the fact that the company is out doing things. I know here the stock thing only has stuff from like last year, which is the rough months ahead. No, nothing like that. Nothing like that. What's really going to happen with this company is it's going to balloon. The price target's going to get maxed the fuck out. It's going to hit $10 price target. Okay, I just know it. I can just sense that, and it's going to do really well. It's going to do really well. I have a good amount of shares in this company, and I think that this is a great time to get invested because it's a penny stock. You can make thousands of dollars with a very, very small investment. Don't need a ton of money. Start with that. Go forward with that. That's what